Hey everybody, Courtney Smith here with the August 26th edition of the Wall Street Winners. Let's get right into it here. Oh wow, this is so exciting. Wow, you know what? You can freeze the screen right here and read it very closely. So everything looked pretty good until Friday. And on Friday, it was crap-a-rama. And you can see we plunged quite rapidly down. Now, a couple of nuances on here. Number one, the purple predictor had been very strong, and actually the purple predictor remains strong. But the width of this bar, the length of this bar is powerful. Whenever you have a very long bar, that's something you need to be paying a lot of attention to. Now, it occurred on good volume, but not super high volume. So this is definitely bearish, but the purple predictor is bullish. So we're actually kind of left in this no man's land. Obviously, we should see some follow through on Monday, but generally speaking, we can't count it as bearish as it felt on Friday. Now, the red line shows that there was more selling pressure come into the market than buying pressure. That's obviously not surprising. Here, the Nasdaq, same sort of thing. We couldn't even break the lows we made last week, but neither could we break the highs we made in the previous week. So we're stuck in a trading range. Now, what that means, though, is a breakout of this high here at about 80.50 on the Nasdaq, or down here at 78.50, that's really going to tell us which way this market's going to go. I think right now we have to say, well, clearly we're going to go a little bit lower over the short run. Our seasonality indicator remains neutral. We're in the seasonally neutral period, so this should not be surprising. But the mini seasonality is actually a little bit bullish. And that's one reason why this market has been doing reasonably well. But notice that what this seasonality says is that we're going to peak in another week or two. And then we're going to slide to October lows. Now, it's quite possible that the seasonal high, we just made it. So seasonality coming in a week early, yeah, sure, of course, happens all the time. So we have to kind of be provisional right now. We can't be definitive at this moment. We need to be nervous. We don't want to have big positions in the market. We want to have some long positions, and we want some short positions. That's where we want to be, because pretty soon we're going to have a breakout or breakdown. And we'll be positioned to make really good money in that breakdown. This, of course, is one of the big background features. And we've been talking about how we'd probably get a big bear market, maybe in the first quarter of next year. It could come as quickly as now. Now, that's unusual. That would be one of the shortest signals in history. But every month that goes by, the chances of having a major bear market, a 20 to 50% down move, increase. So the ideal time may be early next year, but it could happen in September when we get that seasonal low that we were talking about right here. We need to be starting to get, or October, I should say, we should be starting to get more and more nervous as time goes on. This is the yield curve going back, a long time. And what it's saying is it's just some edumacation here. So in other words, 1 year before the crash, we went negative. Now watch this. 1 year before the crash in 2008, watch this, yield curve, negative. You got it? And then, of course, if we get all the way over to here, you can see it's very positive, and that's very positive for the stock market. But by the time we get over to here, watch it start to flatten. Watch it start to flatten. See how it's flattening? There we go. The first sign of a negative yield curve is right here. That makes me nervous. All right, now if you're nervous like me, you should be buying our course. This is our commercial here. It's only $3.97. It's how to make money in bear markets. And really, seriously, you have to buy this if you want to make big money in the coming bear market. It explains how to predict them and what to do once you're in them. Very important that you have this not only for yourself, but for your family. Asset allocation went down. In other words, money went out of the stock market and into the bond market. The market is looking for safe havens. It's looking for a place to get out of risk. In other words, out of stocks. Our stock market RISKDICATOR also down, saying once again, the market doesn't want risk. They want safety right now. They want a flight to quality. Global shares started down, but they closed before we had the big bear move in the U.S., so they didn't go down as much. Bonds up sharply on the down move. Once again, this flight to quality. But I believe that these bonds are going to go much higher. Even without a bear market in the stock market, we're still going to have much higher bond prices. Our key factors, 3 out of 4 say we're going to have lower interest rates. Only gold is saying high interest rates. But gold by itself is not a good enough indicator. Gold plus CRB, now we're starting to talk, but CRB is saying lower interest rates. The dollar got hit hard on the trade war information with the U.S. attacking, the Chinese counterattacking, all of that combined to make the dollar very weak. But at the same time, gold popped up. Now, as you know, I've been bullish on gold now for $200. And today was another great signal. Time to go buy more gold. Our gold key indicators, which had been kind of drifting lower, I was talking about how we would have a consolidation. I think the consolidation is over now. You can see 2 out of the 3 indicators perked right up there. Crude oil, however, I was looking for us to get up to maybe 60. I'm not looking for that anymore. I think we're going to head lower. And the simple reason is that all of this trade turmoil is causing a reduction in the demand for crude oil. So with that reduction in crude oil, we should see crude oil go back into the lower 50s over the near term. Now, how is that impacting Bitcoin? A lot of people felt that Bitcoin would rally as a safe haven, but you can see on Friday, not at all. However, there is a bullish feature starting to develop, and that's the purple predictor. The purple predictor is starting to get bullish again. So right now, I have no position, but the thing I would be looking at is buying a break if it breaks above 13,844. Of course, I'd actually also be interested in selling the break below 7,700. But right now, the purple predictor is starting to turn this picture more bullish. So I'm on the sidelines, and I'm feeling very comfortable not doing anything in Bitcoin. All right, freebies, here's what's happening. All right, I'm in Los Angeles right now. We're doing our Stock Financial Freedom System. Got a great group of people. The next time and the last time in the U.S., Saturday, September 14th and 15th in Las Vegas, confirmed. At this time, we have no plans to ever teach this class again. If we do, it won't be for a year. But right now, no plans to teach it again. Also, very important, you come to the master class for stocks. It's going to be in Los Angeles in early October. Same situation for the Option Success School. We're doing it in third week in September. We have no plans to do this class ever again. So if you're interested in doing options at all, you must come. Email support. We do have some full pay scholarships available, so you could be able to attend it for free. And then our master options class is coming up in October as well. And then that's it for the rest of the year in the U.S. I have been invited to do a series of events over in Southeast Asia and South Africa, and I've accepted that. So I will be doing some events elsewhere in the world. But here in the U.S., no events until maybe third quarter of next year, if at all. All right, and of course our cute little course called 7 Top Trading Tactics for Options Traders. All right, freebies, love having you here. But of course, the cool kids are fully paid up members. Fully paid up members, hang on just 1 second.